Hello and welcome to our monthly engagement to the non-farm payroll. So this will be the first non-farm payroll under the new president Joe Biden and his administration, and he'll be hopefully looking for a good number in the jobs numbers today. It's been not a bad week for jobless numbers in general, so hopefully this will keep going, and we'll look into the opportunities shortly. So first of all, just want to introduce myself for those that do not know me. So my name is David Kindley on behalf of Orbex. We're doing the engagement to the non-farm payrolls. You can contact me at the following links. I'm always available and always happy to answer any questions or concerns, or even if it's just some kind of inquiry into the markets, then no problem at all. And I just want to go through a quick disclaimer before we get started on the NFP. So foreign exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivative trading is not suitable for many members and of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes a solicitation for the purpose of the purchase or sale of any commodity, security or investment, nor should it serve as the basis for any investment decision. Orbex Limited does not guarantee the accuracy or completeness of the information or analysts supplied. So just moving on now to how we go and start on the analyst expectations. So first of all, we've got a vast increase from the last NFP that we saw, 140,000 job loss on the last report. So that was a very, very detrimental NFP. So as you can see on the chart here, we haven't had a minus figure since the first wave of the pandemic in April. So it's quite a vicious circle that we're having at the moment. And hopefully things will prop up in the data that's going to be released shortly. So analysts expect an increase from minus 140,000 from last time, excuse me, up to 45,000, and it could actually be higher. I've just been checking in the last moments, and it could be up to 100k. So this is very encouraging news for the job market in general. So December's data, as we know, which was January's release, was down 145k, so 252k on the expectations as well, which was quite bad as well. Less optimism in the job market as well. But optimism is heightened after economists predict a bounce back from last month's negative figures. So as you can see on the chart here, we had the record increase in job numbers shortly after the first wave of the pandemic. And then, as you can see, it's slowly gone down and now into negative territory, which is not a good sign. But as I said, with Joe Biden taking a seat in the Oval Office, questions remain as to what will happen to certain things like inflation, and also what his stimulus package is going to bring to the economy. So the new administration is trying to push through some sort of stimulus package. And whether or not it will be the 1.9 trillion that he's trying to push through, if he gets this opposition by the Republican Party, then it might be lowered. However, stimulus is stimulus, and anything that's going to be injected into the company it's going to probably be over $500 million worth. So that would be quite, $500 billion worth. So that'd be quite a good start until we can get the ball rolling on further stimulus as well. So Democrats have already lined a package worth trillions of dollars to help support the economy, and that obviously includes billions of dollars to households and states in local governments. So it just means that the continuous flow of unemployed personnel getting regular weekly checks to help them through this dilemma. So if we look at the jobless claims, that was quite buoyant yesterday. It remains below the 1 million bracket, which is more important, and 779,000 above market expectations of 830,000. So you're looking at roughly in the region of about 50,000 less jobless claims that happened last week. So that was quite buoyant for the dollar. Obviously, the greenback's been trading quite nicely the last few days since the beginning of the week. So this is another testament to the dollar as well, to see how far it can be pushed. We're seeing, monthly highs at the moment. I believe it's January the 8th was the last time the DX index was this high. And we can see a bit of a V-shaped recovery now in the DXY index. But we'll see if that's going to keep going as we move into as we go into Q1 and move out of Q1 as well. So ADP figures as well beat expectations by 49,000 and recovering from a downwardly revised 48,000 decline in the previous month. So private businesses hired over 170,000 workers in January, and that's beating forecasts as I said, of 49,000. The service sector providing the most jobs, and this is led by education and health as well, professional business, leisure and hospitality. But leisure and hospitality have hit quite a speed bump in the last, the last year or so, unfortunately. So it's not very good at the moment. So, as I said, jobless claims remain under 1 million, better than expected. It looks like the American economy is getting back on its feet, because this was the lowest reading since November 28th, which is quite important as well. So we're just waiting to see what's going to happen there as I said, as we emerge from Q1 and go into Q2 as well. Consumer price inflation, recovering further after May's 4.5-year low as well. So, things to be buoyed about in the market as we continue the progressive, hopeful economic transition to the upside, which will be, it's been quite a long time coming. Challenger job cuts as well. This provides us information on the number of announced corporate layoffs in the US economy. And so basically, US-based employers announced over 79,000 job cuts in the first month of 2021, and that's the most for January since 2009, and that's up 3.3% in December as well. So the most redundancies were announced in aerospace, in the aerospace industry, which has seen turmoil obviously caused by the downturn with the pandemic, as the travel industry dried up due to the restrictions. So, you have to look at companies like Boeing, for example. They recently, their revenues fell 15% in Q4, probably the most on record for them. The company keeps taking a battering, but obviously the aerospace industry, which is their forte, they're making planes for companies, and the orders are just not going through. And obviously because of tightened restrictions during the COVID-19 pandemic. We're on the second wave now. Is there going to be a third wave of the pandemic? Is this going to lead us into the summer and obviously a lot of holiday seasons for a lot of people? And will that affect companies even more, such as Air France and other airlines that really, really are crippled by the pandemic? So I just want to give Boeing as an example, because we saw their Q4 earnings really, really down. And they missed expectations as well, which was quite significant. So probably the worst in their history. So let's just see if that's going to get any better. So just looking at further expectations, unemployment rate remain muted at 6.7. We've got things like hourly earnings up slightly as well, 23 cents on the dollar. Wages are expected to rise as well year on year. Annual inflation, this has increased to 1.4, beating expectations of 1.3 as well, and down and up from 1.2 the previous period. So, as you see this graph here, where we saw inflation really start tanking lower to the zero negative territory range, we see it jump out as well now. So, there is a bit of a silver lining on the horizon. We're just waiting to see how that's going to play out, and if it's going to play out as well. So as I said earlier, the first NFP under Joe Biden, so he will really want to hit the ground running, give really positive data to the American public. As I said, the jobless numbers are a good start. The initial jobless claims yesterday were a good start, because it missed expectations by 50,000. It did move away from the 1 million barrier as well, and the ADP numbers were quite buoyant as well. So, let me just take you through the NFP preview, what economic indicators can help and why. So we've got manufacturing, non-manufacturing, business conditions in manufacturing and service sectors signal increase or decrease in employment activity. So, as it stands, you've got the service industry and you've got the manufacturing industry. These two industries probably make up a lot of the American payroll market as well. So this is a very important sign if we see decreases or increases in these numbers as well. Challenger job cuts and jobless claims, like I just said before, Challenger jobless cuts did actually increase. Jobless claims decreased as well. So it's a bit of a 50-50 mark there, but jobless claims are coming out on a weekly basis, so it gives us more something to really grab hold of and sink our teeth into when it comes to economic data, rather than waiting on a monthly basis or even a quarterly basis as well. So the jobless claims is very, very beneficial if you're looking at how the economy is going on a weekly basis. You've got ADP, Non-Farm Employment report as well. Consumer confidence, University of Michigan, very, very important survey, as it's been going on for so many years, over 60 years now, I believe, maybe even longer than that. So, it's something to keep an eye on when these figures do come out. And then you've got leading economic indicators as well, treasury yields and equities. Obviously, equities, we've seen the three main equities in America, the Dow, the Nasdaq and the S&P hitting record highs week after week. I believe yesterday the S&P hit another record high, and the Nasdaq almost actually closed on a record high as well. So this is very, very good news. Obviously, they're all waiting in anticipation for stimulus injections, but one has to wonder if it has already been priced in or not. And when the stimulus does come, is there going to be a big sell-off in the indices? So we'll have to wait and see if that comes into fruition in the next few weeks. Excuse me. When obviously Biden is going to really start pushing in Senate to pass his bill. 1.9 trillion is the golden range that he wants, the golden target. Obviously, Republicans are going to vote against it, or just giving him a bit of something to think about in the next few weeks if he's going to pass that much. And but if he gets over $600 billion worth of stimulus, it still is something tangible that can be applied to the US market as well. So we've got crude oil prices as well. What else can we say about oil at the moment, since it went into negative territory last year? Everyone thought that it would probably keep on falling, and obviously it has come on leaps and bounds and hitting multi-year highs now, so up to $57 earlier in the trading day, and we're just waiting to see if that's going to keep on going. 60 is obviously the next target as a psychological range, but it hasn't really had much time. It didn't need much time to go from $40 to $50 and then up to $55 and then today $57. So, very, very bullish sentiment on the oil as well. So, and treasury yields as well pushing higher. And obviously with a good NFP might even push higher even still. So let's just look at the figures then. So we've got more pros than cons at the moment for the NFP preview. As you can see, there's more jobless claims got a better figure. Challenger job cuts were down. Non-manufacturing was slightly down, but when it's such a small percentage, it doesn't really mean too much. But obviously yields, equities and oil at the moment, from when I last checked it recently, they're all three doing very well. So, and obviously, looking at various inflation rates as well, current rates, it's looking good. The Bank of England recently came out to say that they're not going to move rates at all. So this is another thing that has spiked the pound yesterday, and but it's something that they're probably going to keep in mind, as they have said from the Bank of England. They're not really going to be too positive about that. If negative territory is indeed something they have to think about, then it's something they're going to have to do. So, but for the next 6 months, they said it's not going to go into negative rates. So we're just going to wait and see. So if we look at the divergence of interest rates, from one country to another. And we're looking at the currency strength meter as well. So this was taken recently, so we can see the pound is very buoyant. The Canadian dollar is very up, but it showed the last few moments the American dollar is lagging a little bit, so there could be a bit of a sell-off about to be positioned for that. Aussie dollar as well, looking very, very positive in the near term. Remember, this is only in the near term. It's not something projected for anything more, because obviously the NFP, when we look at high impact trading and high liquid trading as well, it's only for the short term. It's never for longer, probably than 24 hours, or probably even for a few hours after the event, unless something dramatic happens. So, if you're hedging, scalping, any kind of trading strategy that you're doing, just be careful. We'll go into some things to look at in a second. So so just getting back to the currency pairs, the strength index, we're looking at if it's a good if it's a negative NFP, then the pound and the Aussie and the Canadian would be a good pair to trade against the dollar. So just certain things to look out for as we go through. Like the last few NFPs have been non-performing. We've had moves of about 40 or 50 pips. So we're just looking to see if that's going to be any more any higher, let's say, to sink our teeth into, to get some real trades in and make some actual profits on the trades, and obviously avoiding losses as well. So just a quick section on how to protect risk capital as well. So avoid trading during the NFP as volatility is high and whipsaw effect could lead to losses and exceed profits. So, this is going back to, making sure that when it's high liquid, high volatility, high impact fundamental news such as the NFP, you can't really get, it's on par with a lot of other big events that go through every week or every month. Like yesterday, we had the Bank of England release their interest rate decision, which is kept at the same amount, so the same target. But that went 70 pips in a few seconds. So it's something just to avoid if you're doing high impact trading as well, making sure that you've got protective stop loss and take profit, which brings me to the next point, maintaining your risk management measures in order to bypass emotional hurdles. So obviously, if you've probably had a losing trade, emotional hurdles do come into fruition. Believe me, we've all been there and done it. So you just have to make sure that applying the correct stop loss and take profits is what we need to do. Close out all positions, if any, ahead of the release in an attempt to divert from high volatility and range risks. So if you know that there is a high impact news event coming, obviously there are many economical calendars out there that you can have a look at to make sure that you're not caught off guard when news or anything can come out that could really shake up a trade that you've had open for maybe a day or two, or even if it's just a few hours. Then make sure that it's closed if you don't want to get involved in any unnecessary spikes in the market. So hedge your positions, if any, ahead of the release in case your risk minimum is because you trade long term or short or have stop losses far from being hit. So, but hedging is a good strategy. It can be beneficial, but at the same time, you could lose a long leg on the buy side and not gain much on the sell side, or vice versa. So you just have to be careful when you're hedging your positions, and if you're trying to minimize your risk as well. So if you're eager to trade despite the warnings, do let the markets calm down before entering a trade. That way you circumvent the heated environment and also have a cleared picture as to where the markets could be heading towards as market noise is reduced. So this just goes to show that, as I said earlier, when trading something like the NFP, high impact news events, then you expect the first probably couple of minutes after the news release to be very, very volatile, which it usually is, and then the markets calm down probably about 5 or 10 minutes after that. So you can say that given probably about 30 minutes after the news event, things will probably start calming down. The market noise will calm down. A lot of the traders and investors will start digesting the information as well. So that will mean that it'll be a bit more tranquil, let's say, rather than at the time when the fundamental news is being released. And always analyze the data post-release without supporting employment, wage and unemployment data. Any directional trade is at risk of reverse despite the NFP is over, as post-effectual bias depends on all three. So, post-release data is making sure that you're not getting caught off guard with anything else that might come out. Obviously, release data as well, which is what we're doing at the moment. We had almost 50,000 more jobs projected, but that has actually increased in the last few hours to nearly 100,000. But you never know until the news is released, until the figures are out there. We never know what's going to happen for the news release. So just analyze as much as you can, making sure that you're not caught off guard with anything that can be surprising. And pay attention to the divergence between actual and consensus figures. Gaps of 20 to 30k are not considered effective that much. So, this just goes back to, this is the last point of caution. And, gaps of 20 to 30k, if the NFP comes in and is a gap of probably 20 to 30,000 jobs, it's not really going to have much of an impact rather than if it's 100,000 jobs. So this is something else to look forward to as well. It is going to be hopefully a bit more of an exciting NFP than the last few. The last few have been a bit of a non-performing payrolls. They haven't really moved much, probably 20, 30 pips maximum, which isn't really a big move for the NFP. If you think of the Bank of England yesterday and their news release moved 70 to 80 pips almost in the first 5-10 minutes, then we have to think about what opportunities you can make going into such a high impact trade, and see just to make sure that you're not missing anything yourself as well, and making sure that there are no surprises in the process as well. So let's just take a look at a basket of the trades that I've been looking at in the last few hours. So we're just waiting now. We've seen this big accentuation on cable. This was the move yesterday when the Bank of England released its news data. So as I said, it actually, the first 30 minutes it was 70 pips. Well, the first 5 minutes it was about 70 pips, and then it kept on pushing higher and higher, and then the rallies kept on going. So we've seen, in 24 hours, almost 150 pip move. So, very, very bullish tone. But then again, the cable was sinking pretty badly up until that point. If I just pull this out, we can see that, from the area of the beginning of the week down until the announcement, we've gone nearly 200 pips down. So there was obviously that room to start bouncing back. And now we've seen this bullish ascent on this trend line, ascending trend line here. You could probably draw a channel in as well, which will be quite beneficial moving to the upside. So, we've seen a bit of resistance here. There's a bit of a false break to the upside here. We'll be seeing if that's going to hit those levels again. Very, very bullish tone though, and we'll just see if we can keep that moving onwards, or if there's going to be a bit more of a downside bias there. So probably the lower quadrant of the 137 mark. I mean, it's trading at 136.90 at the moment. If we can push above 137 again, which is roughly about this area, then I don't see why we can't push any higher for cable. So that'll be something I'll be looking at as the news is released. It's shortly over 5 minutes. Let's just take a look at euro dollar as well, just expand this. So euro dollar has again been slightly on the downside due to the enormous bullish potential for the dollar in the last few days, well, since the beginning of the trading week. So as you can see, I'll just put this on an hourly chart so it's a little bit more easy to see. So we're coming down in a very, very descending channel there, and now we're just seeing levels pick up, but we saw a bit of a pickup here as well, and now we might see a bit more further downside depending on the jobs report. It is supposed to be a bit of a buoyant jobs report, but how much, we'll have to wait and see. If it's a good one, then I'll be obviously looking at a 120 round figure, a little bit like cable, to pass through the psychological barrier, so roughly about this area. And then if we can puncture that ceiling, then there's a lot more room for upside potential and moving in to the mid-range of the 120 as well. A little look on dollar yen. So dollar yen has been very, very bullish as well. Basically anything with a dollar in the equation has gone in the dollar's favor in the last few trading sessions. So again, we're seeing now a bit of a spike. And let me just put it on the 4-hour chart. So actually I'll put it on the daily chart. So as you can see, we're looking to see if prices are going to start going through some psychological tests. At the moment, as you can see, from the middle of October, we had this last spike on prices, and that is creating a bit of a double top. So we'll see if it breaks that. Then there's no reason why we can't test these other regions here, roughly about the low 106. But again, what I'm going to do is bring it down to a psychological figure, 106 round, because from my experience, a lot of the round psychological figures are very important for a lot of traders and a lot of investors to get past, because then they see a little bit more fruition in the currency as well. Looking at the Dow as well, like I said, with the NASDAQ and S&P going for record highs. If I just put this on a daily, you can just see how we're just testing those record highs again, going through where it is now. So basically where the bid line is at the moment, just creeping up to 32,000. So just creeping up above 31,000, going into 31,200. Then that's my psychological level there. If it starts breaking 31,200, and then we'll see if it starts pushing any higher. But I'll just drop that back down to 30-minute chart here, as well with the rest of them, just to get a bit more clearer perspective, because 30-minute charts work a little bit better with high impact news, just to see where we're going. And we can obviously bring it down to 5-minute charts as well as we move on. Gold as well. So we've seen that tank in the last few trading sessions, obviously with the bullish news, bullish risk sentiment, with the dollar and against the yellow metal. So we're looking to see if that's going to start pushing lower as well, if it can hold on to any gains. It has gained slightly intraday in the last few hours. So we just saw this spike here, roughly about $12, $13, trying to puncture again the 1800 barrier, failing to do so recently, but I'm sure it will have another go in the next few trading sessions. The next few hours as well, as we look into how the NFP is going to affect gold, and if gold traders are still going to be in the market, especially the bulls, to try and lift the yellow metal higher. So as you can see, very, very downside bias on gold in the last few trading sessions. So last month in January was very, very significant, obviously dropping over $140. So that was quite significant, and obviously another drop in February as well. So it's only been 5 days since the month started, but already it's looking more positive for the dollar and less for the other currencies that it's trading against. Dollar CAD as well. It's always good to look at the Canadian news, the commodity currency. We've got some Canadian news coming out as well at the same time for their employment. So it's always good when they've got some really high impact news as well coming from the dollar, because it will be very interesting to see if that's going to go against the dollar, and if the Canadian news is going to be just as buoyant as the NFP news as well. So something else to look forward to as well. So again, with the levels for Canadian, we're just going to see if prices are going to start pushing higher. I'll be looking at the recent drop, which was not so long ago, and at the beginning, early trading session, just as the European market was opening, and that was roughly about a 20 pip decrease. It's kind of tried to get higher at the moment, trying to puncture that 128 mark. It's at the 128 at the moment. It's trying to puncture higher, trying to regain those losses that it stemmed at the beginning of the trading session, and we'll see if it can do so when the numbers are released shortly. Just a few more minutes to go. And now we're seeing Aussie dollar as well, and we're just going to see if that's going to move. We've seen a lot of movement with Aussie. They've got China on their backs as well. We're just going to wait and see if any kind of movement is going to happen over the next quarter for the Aussie, especially with its China woes as well. So just waiting to see now. We're seeing a bit of resistance on the dollar yen at the top that it had. If we see a lot of resistance, I'm expecting a fallback down to the previous morning lows, that's for sure. And so that's roughly about 20-30 pip on the downside, probably until it last recaptured. So probably looking at about mid-30 pip move there. The Dow, I'm just waiting to see if it's going to have another push to the upside. Even if we get a bad jobs report, you know, US stimulus is the one that's looking like it's going to propel the US indices even further, you know, the Nasdaq, the S&P and the Dow Jones as well. So just waiting for the figures to come through now, and we'll see if it's a good or bad jobs report. Obviously, we can see the euro dollar spiking higher, so this indicates maybe not as good, but we'll see shortly as the numbers come through in the next few minutes. So basically, all the pairs that are trading against the dollar, having the dollar as the quote currency, then they're actually spiking higher at the moment. So that's quite buoyant. Pound gone over 137, which is quite good. The dollar yen is collapsing at the moment. So just waiting at the moment to see. Dow Jones is going a bit lower as well, as we're just waiting. So average hourly earnings rise 0.2% month on month. So that's quite a good indication for the US jobs market for those that are still employed. Very, very important there. So US January payrolls rise 49,000 and the estimated up. So 49,000 payrolls risen. So quite a standardized NFP at the moment, and we're just waiting to see further data for the rest of the news to come out, because obviously it's not the NFP that comes out, it's the other jobs data as well. So euro dollar at the moment, as I said, the 120 handle at the moment, you know, 15 pips. So we're just waiting to see what's going to happen in the next few minutes. Unemployment rate falls to 6.3%, estimated 6.7%. So that's not too bad. Not much of a differential in percentages, but you know, if you think of the grand scheme of unemployment that there is in America, then you know it's quite significant. I'm just wondering to see if this spike that happened is going to start falling downwards. Manufacturing payrolls fall by 10,000 in January, so that's not looking too optimistic for America at the moment. So we're just kind of stuck now on the 120 for the euro dollar. The 137, as you can see, very, very big psychological handles. We're seeing a bit of a resistance there for the dollar yen as well. And just looking around the other ones, gold as well, looking like it's spiked upwards, but it's pierced the 1,800 ceiling, but we'll see if it comes down in the next, well, probably in the next 10 minutes after the NFP. As I said, once the market noise kind of starts going downwards, then we can see a bit more of a clearer picture for the next probably 20-30 minutes for the ripple effects to kind of stop, and so we can get a good foothold on what's actually happening in the next few trading sessions. So yeah, manufacturing payrolls fall by 10,000, so looking a bit bleak. So basically it's not been a great NFP, as you can see from the dollar currencies that are hitting each and every one of the currency pairs: cable, euro dollar, dollar yen, even the dollar CAD as well. There's been a significant spike in the dollar CAD. However, prices now are starting to reverse and reality kicks in. So, you know, 30 pips, which is quite decent, but now we're back down to 11 pips. So there could be some people taking profit on the CAD, as I said, especially with the news updates that they're probably bringing out as well. And we're just waiting to see further information now on what's actually happening in the next few minutes. So Aussie dollar, that's been quite significant. As you can see, I would have put a level in here, most probably at this spike, and it's actually pushing to that area at the moment. We're seeing a bit more of an upsurge now as the numbers really sink in that it wasn't really a great jobs report for America. Not good for Biden on his first NFP. He'll be hoping that the next one will be a lot better. Obviously, the first 100 days for a president to be in office is the most important, because it's the 100 days is when a president really starts signing off on his new agendas and making sure that they're going to be put in force as well. So we're just waiting to see what else is going to happen. So as you can see, cables punctured the psychological 137. Euro dollars punctured the 120. We're seeing heavy resistance here on the dollar yen, and I'm just waiting to see any further upside. So Aussie dollar as well moving quite nicely. So we've broken that psychological spike that we saw. We'll be looking for the next one here, and then obviously we've got some other levels here, but let's just take it one step at a time. We've got the next one here, roughly about just over going into the mid 76 cents, and we'll see how it goes in the next few minutes. I'm just getting updates as well, so I'm just obviously checking those as we go. But yeah, gold is very precarious at the moment. It's breached the 1,800 handle, but we're just waiting now to see if it can hold and maintain, because there have been a lot of bears in the market, and obviously this has weighed in on prices and other things as well. So let's just take a look at what we're looking at here. So yeah, 49,000 jobs added in January, and compared to market expectations of a rise of 50. And as I said, there was a bit of an expectation it was going to be more leading into the 100,000 bracket, but that has failed to materialize. And obviously the halt of the COVID-19 restrictions in December has really had ripple effects for the January jobs numbers as well. And we're just waiting on if more vaccinations, the quicker rollouts of vaccinations. Obviously, speaking from a UK point of view, there's a new mutated variant in the UK at the moment that's supposed to be shrugging off a lot of the vaccinations, so people cannot be immune to it. So waiting on companies like Johnson & Johnson to release and get their shot, antidote, whatever you want to call it, out in the market, licensed, regulated, and that shot only needs one injection, so that will be a lot more beneficial than having 2 injections in sporadic 6 months periods. So we'll just have to wait and see how that's going to play out. So yeah, 49,000 jobs added, a little bit less than expected, so that's why we're having a little bit more of a downturn. And as I said, the expectations were actually that it might be higher than 50,000 than the consensus, but it hasn't unfortunately reached that amount at the moment. So closing the first 10 minutes after the NFP, as I said, we're coming back down now to 120. We'll see if cable starts coming down back to the 137 region. There's obviously always a big a chance of a retracement once there's spikes in the market happening, and this is no exception. So I'm just looking at gold. I keep mentioning it because I'm just worried it's going to tank even further. As you can see now, we're falling into the 1803, okay, 1805 now, so it's a little bit choppy on the bid line, so the ask line is going to be a little bit higher, and we'll see if that's going to have any great effects as we go into the final session of this week. Dollar CAD as well, as you can see, quite a huge spike, a little bit of an upturn there, a bit premature with the with the positivity to the upside. Obviously it broke the 128, sorry, it broke the last handle that I was looking at, which was the morning's drop, but now as you can see prices are getting weighed down, and it looks like it's going to probably stay under the price drop that we saw from the morning. However, there is still a lot more of the trading day to go, so we'll see if that's going to keep on pushing. Aussie dollar again, so we're trying to get past this psychological barrier here, and we're just looking to see if it's going to start pushing higher to the previous peaks that we saw. Dow as well, just want to have a quick look on that. Again, didn't really move much. We're not really seeing much in the way of that much of a spike. Let's just bring it down to a 5-minute chart so we get more of a better perspective. And we're just seeing now that there's a bit of a recovery on the downside, and now markets are consolidating again. So as you can see here, we're looking at this consolidation, and if prices are going to start moving higher or lower from that scale, which will remain to be seen. It looks like it will probably start consolidating a little bit further into the rest of the trading session, but obviously something to look forward to as we move into next week. So, as we close out the NFP session in the engagement, just look out for more stimulus next week, for more stimulus headlines, next week for Biden's regime and his administration to try and push through. This could send the dollar spiraling, or it could send it higher. Obviously, gold is bouncing off the back of dollar as well as the safe haven that people are going to look to. More successful vaccinations in the market are obviously weighing in on gold. That's a very, very bad image for gold. Obviously, if we look at 2020 at the high spikes, this was before any vaccination news was coming into play. It was when the full first wave was being engulfed, and then we obviously got some vaccination reports, and then going into 2021 as well. So if we just look at daily as well. So, sorry, this was the first wave, I beg your pardon. This was the first wave and the risk aversion that was happening, and then obviously we had the plummet down because more and more vaccinations were becoming apparent. First you had Pfizer, then you had Moderna, now we've got Johnson & Johnson coming to play, and we've also got one Russian antidote that's supposed to be coming out in the next few weeks as well. Excuse me. So we're just seeing what the headlines are for the next week. Obviously, this will push the currency markets against the dollar to different regions as well. As you can see with pound, just put this on a daily chart as well. Look at the accentuation over the US dollar with the pound, but now we're seeing in the last few trading sessions that dip, and we'll see if this dip comes into fruition even further as we get even closer to the middle of Q1, and as we escape out of Q1. Obviously, a lot of earnings seasons as well. A lot of companies doing earnings season as well, which has affected the indices. So something to look forward to with US oil as well, and hopefully that will bring a few more fortunes to a lot of traders when they're trying to decide what to trade on as well. And just as we close, as I said, just keep an eye on the psychological barriers. These are always important. Rounder figures are always more important than, let's say, 120 88, let's say, or 121 55. If you've got 120 120 50 121, these psychological barriers are going up and up and up, and it's like breaking the glass ceiling, and once it's broken, there's room for more upside or even downside if you're shorting positions as well. So it works both ways. Always remember, and as I said, going back to risk management, always remember your risk management, put in your stop losses and take profits. I mean, if we just go down to a minute for the euro dollar, we can just see, as you can see here, when the news was released, excuse me, we've got a 15 pip move in 1 minute, so very, very significant, and then that went up to about 20 pips in the following preceding minutes afterwards. So always make sure you've got your stop losses and take profits, so that your risk management and your risk capital that is applied is the only funds that are being applied for this, for high impact trading and high liquid trading as well. And just have one final look now. So as I said, the Aussie dollar, so a quick look at the currencies before we close. So the Aussie dollar starting to project upwards now. We see these false spikes previously in the week, so we're just waiting to see if it's going to get any higher. But I think a top would be roughly about the 76, the mid 76 range, possibly going to the 76 cents and 50, roughly about this area here. If we beat this false spike, pushing higher, and then obviously to the previous levels that we've seen at the start of the trading week. Dollar CAD, as you can see, almost a full reversal there, full retracement in prices since the NFP. Let's bring that down on a 5-minute chart so it just looks a little bit more clearer. So as you can see here, a very, very big spike as the NFP news and the Canadian news was made, 30 pips, but as you can see, we've not only retraced, but we're falling lower for the CAD. So, just something else to keep in mind as well, when there is a big spike in the market, look for those retracements. There can be, very good scalping opportunities as well if you're wanting to get in and out of trades. So now we see gold 1800 round. Not surprised by that. I didn't think it would probably get past the maintain its stance above 1800. Now it's gone 1803. So I'll be looking to see if that's going to start falling any further or start consolidating for the rest of the day, roughly around the 1800 area, because that's a very, very strong psychological level. And in previous trading sessions, once it's fallen below 1800, it took a while to get back over 1800. The Dow as well, like I just mentioned, looking more at stimulus headlines probably and job headlines rather than anything else. So just waiting to see if that's going to start pushing to new highs, as well as the Nasdaq and the S&P 500. Cable as well. That's really nicely pierced the 137, going up to 137.15 now. So that's actually done pretty well in maintaining its stance above the 137 psychological handle. So as you can see here, 25, 26 pips. Again, it's pretty decent in this kind of NFP climate because we don't really see big moves of up to 70, 80, 100 pips anymore. We just see moves of roughly about 20 to 30 pips. So this is quite significant and still pushing as well. And so as you can see, we're still getting some market noise. Euro dollar still pushing as well. That's been quite significant. So that's gone through the 120 handle. And now I'll be looking probably at the mid 120s. But, if that can go 50 pips, we're at almost 40 pips at the moment. If that can go 50 pips roughly to about this region, then that'll be a very, very good trade for bulls and the buy side, obviously. Dollar yen, obviously a mirror image of the euro dollar and the other currency pairs with dollar as the base or the quote. So we're just seeing now if that can start pushing further downwards. So we've got 25 pips there, pretty much the same as the euro dollar. Again, very, very heavy resistance here. I don't expect it to bounce back above this 105.70 region. I just want to pull it out though a little bit more just to get a better perspective and zoom in. So we've got these levels here. We're looking at the downside now, don't forget. So at the moment, 105, probably the lower end of 105 is where I'll be looking at the rest of the trading day if it's going to fall any further based on any further ripple effects in the market. So as we come to the close of 20 minutes after NFP, that's the webinar finished with, and thank you very much for joining me. Obviously, I'll be posting this on YouTube as well, on our YouTube channel, and if you have any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, have a great weekend ahead, and I'll see you next time for our next engagement in the non-farm payrolls. Bye for now.